So in the last part of our presentation, we will be discussing how MCLR system is benefiting the home loan borrowers, how it is impacting the new home loan borrowers and the old home loan borrowers who had already borrowed in the base rate system and can get the benefit of new MCLR system. Along with that, we will be also focusing some light on the shortcomings of MCLR system. Let us take an example of home loan borrower and try to find out how he gets the benefit of MCLR system. Here Mr. A is our home loan borrower. He can get home loan either on the fixed rate of interest or on the floating rate of interest. But fixed rate of interest home loan is not affected by MCLR, while the floating rate of interest home loan is affected by MCLR system. All loans sanctioned on and after 1st April 2016 are linked to MCLR system. So MCLR is a new mechanism based on marginal cost. It is directly or closely related to repo rate and encourages bank to accept the latest repo rate change as promoted by RBI. So therefore MCLR is a reference rate or internal benchmark rate used to determine the minimum rate of interest on home loan. If there is a change in the repo rate, it will have an impact on home loan on the floating rate of interest. Now let's see Mr. A opt for floating rate loan. Now what is the total cost of the loan? The total cost of the loan is not only MCLR, but spread is also added to it. Spread is added by the commercial banks, which depends upon the credit profile of the borrower, and it is decided on the basis of CIBIL rating of the borrower. So suppose the floating rate on home loan for 1 year is 8.2% MCLR, and the banks had put the spread of 25 basis points for loan up to 6 crores. Now, the total home loan for Mr. A will be 8.45%, that is MCLR plus spread. Mr. A has to pay EMI installment at this rate of interest for the next 12 months. Although MCLR is revised monthly, but Mr. A home loan will be reset every year automatically depending on the agreement with the bank. Let's assume 1 year MCLR rate get modified and it is reduced to 8%. Spread charges remaining the same. So now Mr. A home loan will be reset at 8.25%. That is 8% MCLR and 25 basis point the spread charge. So MCLR as on the sanction date of floating rate home loan will stand the same till next reset date. Renewal of credit limit and sanctioning of loan is done as per MCLR norm. Another question comes here. How the old borrower who borrowed before 1st April 2016 can get the benefit of RBI rate cut under MCLR? So old borrower has the option to shift from the base rate to MCLR and get this benefit. But this decision to switch from base rate to MCLR depends upon the actual benefit and transfer cost. Borrower can request their bank to link their loan with MCLR. Bank can charge some fees for this switch. However, there are some banks that convert the home loan to MCLR without any charge. Once the loan is linked to new MCLR rate, borrower can request the bank to reduce the quantum of spread. Banks may charge the borrower one-time fee for reduction in spread, and hence borrower will get the benefit of new rate of interest which is linked with MCLR. MCLR effect on home loan borrower is not unidirectional. If interest rate cycle is in downward trend, MCLR can be beneficial to home loan borrower, but interest rate may not remain low forever. When the trend changes, MCLR can increase and that could increase the burden of home loan. So the burden of home loan on the borrowers can increase or decrease depending upon the direction of change in RBI policy. Suppose RBI decides to increase the liquidity in the market, it cut the repo rate. This lead to decrease in the marginal cost of borrowing by the banks. MCLR rate will decrease, that means fall in the bank's lending rate. Home loan becomes cheaper and borrower gets benefit. But if RBI decides to reduce the liquidity in the market, it increases the repo rate. This will lead to increase in the marginal cost of borrowing by the banks and results in increase in MCLR. That means rise in the bank lending rate. Home loan become costly and borrower get loss. So now if we evaluate MCLR from 2016 to till date, we find that the experience with the MCLR system has not been very satisfactory. This might be because the policy transmission under MCLR has remained uneven in terms of its pace and magnitude. Uneven transmission across the sectors of the economy, between the deposit and the lending rate, between fresh rupee loan and outstanding rupee loan. MCLR rate also vary from bank to bank. It vary according to the maturity of the loan. The progress of migration of borrower from the base rate system to MCLR has been very slow. This might be because the banks do not widely publicize the option to shift to MCLR linked loan. Along with that, banks charges fee for facilitating the shift from base rate to MCLR. It was seen that there is no reduction in the interest rate immediately following the shift to MCLR system. For all these reasons, borrowers are either ignorant of the option or are discouraged from shifting to MCLR linked loan from the base rate. MCLR is often criticized for its discrimination with the existing or the old borrower. As the existing customer who wants to convert his base rate linked loan to MCLR linked loan would be required to pay higher spread than the new borrower, even though all other factors that go into the pricing of the credit, that is risk profile, maturity, loan type, remains the same. Another criticism regarding MCLR is RBI has admitted that the rate cut have not reached to the borrower completely, even in the MCLR system, as a rate cut of 50 to 60 basis point by RBI, but customer get the advantage of only 30 basis point. This might be due to the spread component charged by the bank over MCLR associated with the risk profile of the borrower. This itself defeats the main purpose of MCLR as a reform in banks' lending rate system. If you have any question on this presentation, please put your question in the comment section and like and subscribe my channel to get further notification. Thank you so much.